Your home's your castle, right? Well, at least it's supposed to be. What happens if you fall a mortgage payment or two behind? And all of a sudden you start getting threatening letters from the bank and they notify you that foreclosure is getting closer and closer and closer, and now it looks like foreclosure is actually going to happen to you and you're going to be on the street with your family and your furniture. Is foreclosure your only option? Well, it may not be. Loan modifications are predicted in 2009 to be in excess of 10 million. And there are a lot of reasons for that. I'm going to cover it during this video. I'm going to show you some examples of loan modifications that one of our law firms have been able to successfully negotiate for homeowners. I'm going to explain very clearly why this is good for the banks and why it's good for the homeowners. And I'm also going to give you the web address for Loan Mods or Us so you can go and view the 22 most frequently asked questions that we receive about loan modifications. Let's start with an example where a homeowner had a 7.875% mortgage, dropped it to 6%, which is nice. Payments, because it's a large loan amount, went from $5,200 down to $4,100 and change, instantly saving the homeowner over $1,000 per month. Now, what's particularly nice about that $4,100 is it includes a principal reduction of $800, and then each month it becomes a little more than $800 to reduce that loan balance, where the $5,200 did not include a nickel of principal reduction. Because of this fact, the mortgage is shortened by 3 full years. Additionally, the homeowner was behind a payment, and with interest and penalties and legal fees, it had accrued to $8,800. All of that was simply forgiven, not added to the loan, simply forgiven, making them current. So, monthly, between the principal buildup and between the reduction in what they pay each month on their mortgage payment, they've got $1,800 per month. You do the math, that times 12 is $21,000 in the first year alone. You add the $8,800 to it and you're looking at a $30,000 savings or equity buildup for this homeowner in year number 1. Second homeowner was upside down on their mortgage. They owed $356 on a home worth less than that. They were able to drop the principal down almost $36,000 to $320,000 on the loan, dropping the payments from $2,100 down to $1,200 and change. That's an $859 per month instant savings. So you've got principal reduction, savings each month, and removal of the negative amortization loan, showing a fixed rate loan starting for the first 3 years at 4.75%. Now, why do banks do this? Well, big banks and little banks everywhere in America are finally awakening to smell the coffee and realizing that dealing with a homeowner who is in the house, who has her kids in schools, who is attending a local church or synagogue, is a heck of a lot better candidate for that house in staying in that house if they can simply make the mortgage payment affordable. Their other option, very simply, is foreclosure. When a bank forecloses on a home, many people don't realize this, but by the time you take the costs, the legal fees, the lost income, many times the repairs, the average cost of foreclosing on a home in America is over $50,000. Additionally, the bank then has to put money into reserve, so says the federal government. They have to fix up the house. They have to resell the house. They got to pay a commission to the realtor that sells the house. So from a cash flow perspective and also from a balance sheet perspective, the banks win huge when they're able to do a loan modification with you or me, the homeowner. Now, from our perspective, evaluations are free of charge with all the reputable companies out there. If they want to charge you to evaluate your circumstance, that should be a red flag for you. Loan modifications in and of themselves do not affect your credit score. And the interesting thing right now in our financial environment in America is that you can get a better rate on a loan today if you're 3 or 4 or 5 months behind than if you had perfect credit by using loan modifications. It can stop the stress in your life so you don't have to take the kids out of school. You can have a mortgage payment that you know you can live with and you know it's permanent. Now, can you do this yourself? Yes, of course you can. You can also do your own brain surgery. You can also realign your own front end on your vehicle and pull your own teeth if you want to. You know, those of you that subscribe to my videos know that I don't generally care much for attorneys, but I have to say this is one of those cases where you need a law firm in your corner calling the bank on your behalf. I've shown you where past due amounts can be forgiven. I've shown you where loan balances can be forgiven. Chances are pretty good that you or I would not have been able to get that done. On our website, Loan Mods Are Us, you're going to learn about qualifying. You're going to learn, if you don't know exactly what a loan mod is, how Obama's plan affects why banks are doing this and how it's advantageous for you and I as well. You'll learn what a hardship letter is and why it's essential. You'll learn the difference between this and debt consolidation or debt settlement. And you also learn why, as I said, I think you need to have a law firm in your corner. There's no advantage to waiting. Decide if loan mods are right for you. The environment has never been better than right now. At Loan Mods Are Us, one more time, 9 law firms, one of them, if they approve you as a client, have a 97% success rate in being able to get your loan modified. There's no cost to find out whether they'll accept you. If they do, and if for some reason they're unable to get a loan modification done on your behalf, they refund your money. Here are all my contact phone numbers, my email, the website. Please check it out, evaluate it, see if it's right for you. You can do this yourself again. Call and scream, talk to that $8 an hour clerk that barely speaks English, or let one of the law firms call on your behalf and talk to the vice president in charge of the department. Who do you think's going to get better results? You know and I know. Check it out. I hope this is something that makes sense for you. Either way, I thank you for your time, and may God richly bless you and yours today.